I'm very thankful and I really appreciate for giving me this opportunity to present this subject related to Islamic banking and finance. And from the beginning, I would like to just mention that it will be just introductory level. Do not expect something that will go in very deep in the terms of the contracts of the Islamic banking and finance principles. I'll just give you some introduction and overview of it and how it will look like. But if you'll be later interested in more details in learning, then I can share the book and can share this lecture notes and so on. So I taught this course only one semester. It was just before the pandemic in the Kimep University. So basically my research specialization is Islamic banking and finance. So talking about mainly about the bank. Everybody knows that the bank is the financial institution or financial intermediary that accepts the deposit and channels those accepted deposit into the lending activities, either directly by loan or indirectly through the capital markets. So this is the way how the banks, they earn the money, by charging the interest on the supplied loan. So they collect the deposit and lend the money. This is what we know, like basically. So simply to say, they just link together the customer who've got the capital deficit and with the customer who have got the surplus of those capital. So this is the main idea of the financial intermediary. So the same principle applies to the bank, to the Islamic bank. They just connect those people who have deficit in capital with those people who have surplus of those capital. But how you do this through the interest or through different real economic activities, it makes a difference between the Islamic bank and conventional bank itself. There are many different types of banks that we have in here. I'm not going to go over each of the banks, but we're going to concentrate only on Islamic banks itself. So before that, I would like to share with some statistics with you, giving you some statistics, okay? According to statistical data, to Islamic financial institution statistical data source, we've got in 2018 around 2.5 trillion of the assets. I mean, Islamic financial assets. What are those financial Islamic assets? Are Islamic banks, Sukuk. Sukuk is type of conventional bonds, but Islamic Sharia-based Sukuk. Other financial Islamic institutions, Islamic funds, and Takaful. Takaful is the Islamic insurance. So these all different categories of Islamic financial institutions, they contribute in 2018 in terms of assets around 2.5 trillion. And it's expected in 2024 to reach almost 3.5 trillion. So the Islamic financial institution assets are growing very rapidly, okay, with a high speed. So if you would like to see the statistics on the right hand side, in total we have in 2018 it's 1,447 financial institution, Islamic financial institution, but in 2020 it was officially considered like more than 1,500. And those are Islamic banks, Sukuk, other financial Islamic institution, Islamic funds, and Takaful. And here's the data. We can see that the size of each Islamic financial institution, like Islamic banks and Sukuk, how much they have. The largest contribution, the largest the market share is dedicated to Islamic banks. In the world, there are 520 banks of Islamic banks in 72 countries. Here's another statistics that I would like to just give some attention. We can see their top countries that are more Islamic finance oriented, okay? And basically, by Ernst & Young, there was a new classification of countries. It was Qismut plus 3. I'm not sure, maybe some of you already heard about it, but recently I published one article related to that classification countries. Like there are 9 Islamic finance oriented countries with the largest Islamic banking assets, okay, Qismut plus 3, which is Qatar, Indonesia, Saudi Arabia, Malaysia, United Arab Emirates, Turkey, and 3 other countries. So these are the Islamic finance oriented countries. So this research was conducted. If somebody will be interested in it, I can share the link later. You can read it. It's more related to the global financial crisis, how they performed in contrast to the conventional banks. I mean, I'm talking about the Islamic banks. So in here, we have got more than 9 banks. Not more than 9 countries that are Islamic finance oriented, but their new classification came out in 2018. It's top 3 countries with a top 3 market share global Islamic finance, which is Iran, Saudi Arabia, and Malaysia. However, the fastly growing markets in Islamic finance in terms of the Islamic finance assets are Morocco, Cyprus, and Ethiopia. Okay, these are the highly growing. And these are the concentration of the Islamic finance asset by the regions in 2018. In total, they count in 2018 1,477 units. So concentrating more on Islamic banks, we've got 520 Islamic banks. There are 301 fully fledged Islamic banks and 219 only just they opened the window. So in all non-Muslim countries, in non-Islamic finance oriented countries, the banks, they started to open the windows like HSBC, Citigroup, and so on. So in UK, in the US, in the Canada, in most of the Europe countries, especially in the Cyprus as well, they open the windows to serve the needs that arise for the Islamic finance product. And if you just talk about the global market share of the Islamic banks, they count for 6%, and it's growing. In 2015, it was just 4 and 5%. Now it becomes 6. So year by year, the market share of the Islamic banking assets in terms of in total banking assets in the market share, it's growing. So Islamic banks are categorized into commercial, investment, and wholesale and specialized banks. And the number of the banks, as you can see here, in total they count for 520. And the Islamic banking asset is accounted for 1.7 trillion in 2018. But 2020 it just reached to 2 trillion. So there's another statistic that are given here, like top countries in Islamic banking assets. Before we were seeing like Islamic financial institution assets, okay, here. As we can see, top 3 countries that has more, these are the number of the banks, okay? Like 42 Islamic banks, 38, 26, 35. We can see that Turkey has got 5 banks, and Bangladesh has got 25 banks. Indonesia has got 34 banks. Saudi Arabia has got 390 banks, and so on. So basically, the difference between Islamic banks and the conventional banks, Islamic banks, they operate in accordance with the rules of Sharia. We're gonna see what is the Sharia means. And this is known as fiqh al-muamalat, Islamic rules on transaction. So the basic principle of the Islamic banking is sharing the profit and loss. And the main part of it, it should be ignored. You should not consider the interest rate. Interest rate, which is riba, is strictly prohibited in the activities, in any activities that Islamic bankings are involved actually. So let's talk about the Sharia. What is the Sharia? The Sharia is an Islamic religious law that governs not only the religious rituals and prayers, but also the aspect day-to-day life. It's a conduct of the laws that is used by the human in terms not only the religious aspect, but in economic activities as well. So literally speaking, the Sharia means the way. So it consists basically of 4 main sources, the Sharia. First is Quran, then Sunnah, Ijma, and Qiyas. The Quran is the holy book, Sunnah is the activities, Ijma is the consensus of the scholars, Qiyas is the analogy situation. So this thing that I'm going to discuss it in a detail in a later chapter, in a later slide. So basically Sharia is based on the four main sources: Quran, Sunnah, Ijma, and the Qiyas. So Quran is the holy book of the Islam and understood by Muslims, literally the word of the God. So it tells you all the it touches all the aspects of the life, not only the rituals, not only the prayers, but also the economical activities and how it should be conducted in order not to be more transparent. Sunnah is the saying and the actions of the approvals of the Prophet Muhammad, peace be upon him, peace, blessing be upon him. And we have Ijma. This is a consensus which is reached on a particular issue by Islamic scholar. So in order to understand the Quran and the Sunnah, basically we need scholars who can really interpret in a correct way how it can be implemented a certain activity, not to contradict any Sharia rules or laws. And the last one is the Qiyas, which is analogy, simply to say decision which is made by scholars on a particular issue by comparing with a similar situation that may have happened before. So there is a situation that is not mentioned in the Ijma, in the Sunnah and the Quran. However, it took the place. However, we have a similar situation that could taken before. So the Qiyas is you're just comparing the previously taken action with the current one in order to come up with a certain decision whether a certain activity is permissible or not. So the banks have got certain regulation, certain standards, which has come out of the decision of the scholars. And the scholars, they make decision based on these four sources. Contracts are considered, so there are some principles that we can underline. The contracts are considered to be permissible, assuming that no Sharia violation is proved. Therefore, the Sharia is not restricted to any specific forms of contract. Sharia made changes to the prevailing contracts that time by adding additional conditions, and any arrangements leading to prohibited practice is also prohibited. So the main prohibitions that are considered in Islamic banking activities are riba, which is interest rate, gharar, which is uncertainty, and impermissible, which is impermissible activities. There we're going to discuss them. So you may ask, okay, if the riba is forbidden, there are and so many prohibitions. So then how the Islamic banks, they do earn the profit? Of course, they do not work for donation. The Islamic banks, they have been established for certain purpose to stimulate the economical development in a certain country, and of course to earn the profit in accordance with the Sharia regulation. And the main prohibition that should be considered is the riba, gharar, and impermissible activities. Talking about the riba is well-known prohibition in Islamic banking and banking and finance itself. And if you go to 1572, it's the oldest bank, conventional bank that has been established, Bank Pizzadella. It was the bank which was based on an old Christianity script where the interest rate prohibition was taken into as a priority consideration. So it was the bank without any interest. First, conventional bank, and then later it has been subject to changes, and in that way the interest rate was added. But first initial establishment of the conventional bank in 1572, Bank Pizzadella it was established in Venice, and it was a Christian bank, and it did not have any interest rate in their activities. So interpreted as interest, but actually refers to any stipulated increase over and above the principle of loan or the debt transaction. A sale of an item on a deferred payment for a price higher than the spot price is allowed, as long as it is not linked with the time for repayment. So main prohibition of the gharar, like non-existence, like selling the crop for of the specific field. Like I have an apple, let's say I have a garden where I grow the crop and I cannot sell it, let's say 10 tons of the crop, I will sell it for you for this price. It cannot be sold because it still did not come into existence. Still you did not wait it. So there should be, the asset should exist where you can wait it. I mean, in terms of the agriculture. But if you talk about the construction, it's a different story. In the construction, you can really specify, underline before the property is delivered, and you can share all the futures. But when it comes to the agriculture, it is very it should be very you should be very careful in involved in this type of activities. Selling, let's say, in Almaty is very popular is apple garden. You cannot sell the apple now. We know that the apple will be delivered before the September. Okay, we've got some apples in here, and you cannot sell it now because still you don't have it. You don't know what will be the amount. You don't know how they will look like and what will be the weight of each apple. Maybe some factors that may really influence the quantity and the quality of the apple. So the quantity and the quality should be known before selling of something. Non-deliverability is the sale of something before it is not in one possession. You cannot sell something that you do not own it. You should be an owner of certain thing, then you can resell it. So I cannot just make an agreement, okay, this is the laptop or the car I'm reselling. However, I did not bought it myself, the car, so I cannot resell it to the third party. I have to first buy it and then resell it with some markup. Basically, I'm involved in a trading activities. And ambiguity in the specification, sale on a credit without specifying the maturity date. So you have to be very specific. So if you're selling on a deferred payment, you have to specify the maturity date. You cannot say, please pay me anytime, but one day you just come up and say, okay, just pay me now. It cannot work like this. You have to specify before the sale take the place. You have to specify all the details, and you have to clarify the maturity date. The main prohibition, like impermissible activities like insurance, the conventional insurance we have, the banking, the banks and organization whose principal activity is based on interest, alcohol, non-halal foods like producer, distributors, meat stores and companies. So there are certain ways of getting the halal foods. So that should be followed by those firms and by those companies in order to be halal. Gambling, like casinos, betting clubs and other companies that are involved in a gambling, it's not permissible. Adult entertainment as well is permissible. So in this type of activities, the Islamic bank cannot be involved and cannot finance a certain project, like tobacco as well. So the key objectives of the Islamic banking and financial principles is, first of all, transparency in your transaction. Second, you should be very socially responsible. So if you produce something, you should be responsible in terms of your environment. You should not pollute the environment. You should not harm any surroundings you. And of course, you should curb the speculation. And which is the last one, very important, or any type of activity that you're involved in, it should be based on real economy. Otherwise, your activity will not be considered as permissible. So, okay, talking about Islamic banking activities, it might seem that it's very young. There's a question, I think. Yes, I think Jangmin is recording. It will be available, the materials and the recording will be available. So talking about the standards, okay, as we know, the conventional banking existed since long time, and they have some standards that they are attached and they are working with. And there are some scholars, they really just perceive that Islamic banks, they are new and they don't have any standards. And however, they do have some standards. And those standards are created by Accounting and Auditing Organization for Islamic Financial Institution, which is abbreviated as AOFI. Is a non-profit organization which was established to maintain and promote the Sharia standards for Islamic financial institutions around the globe. Accounting and Auditing Organization for Islamic Financial Institution was created on February 26, 1990, to ensure that the participants, they go in line with the regulation that has been set by Sharia. In Islamic finance, there are unique rules and restrictions and requirements regarding the business and investing. So in order to be considered as acceptable, the transaction must adhere to the principles that goes under the Sharia rules. AOFI sets a compliance standards for the institutions around the world that wish to gain an access to the Islamic banking market globally. So AOFI is continually updating its scope and to include the various new financial instruments that enters to the market around the world. So basically, the AOFI organization is giving you the standards where the scholars are creating certain financial products, Islamic based. So all the Islamic financial products should be going in accordance with the standard that has been settled down by this organization. So let's talk about the Islamic banking activities that goes in accordance with the Sharia. I'm not going to talk about all, but I'll select the most popular one. However, there are more than 100 activities actually. If there's somebody will be interested to get details of these activities, I can share the book. It's a really good book with some case studies, with some case examples that are given there. So, but in here, I'm going to just go briefly with the popular activities, with the popular Islamic banking finance principles. The first one is the Musharraka, which is joint venture and the partnership that we have in a conventional system. The second one is the Mudaraba, which is profit and loss sharing. Murabaha, cost plus financing. Ijara, leasing. Qardul Hasan, good loan with no interest. Sukuk, it's a similar trust certificate or Islamic bonds, we call it sometimes. And Zakat, it's a certain donation which is obligatory on every Muslim. They have to pay if they reach a certain minimum requirement to pay the Zakat from the money they earn or from the asset they own. Talking about the Musharraka, Musharraka is an Islamic mode of financing in the form of the partnership between the bank and its client, where each party contributes a certain capital in a certain project. It could be 70 to 30 or 50 to 50. So accruing a profit is divided between the partners with a pre-agreed formula, while the losses are shared on pro rata basis. So the word of Musharraka is derived from Arabic word shirka, which means the partnership. Islamic jurists point out that legality and the permissibility of the Musharraka is based on the injunction of the Quran and Sunnah ijma of the scholars. So there's nothing wrong with this product. I mean, it can be sold in any world, in any country in the world. So there's no problem with the permissibility. So basically, there's a diagram. I have it here. We have two partners, partner 1 and partner 2. So they both contribute. Let's say this could contribute 70%, this could contribute 30%. They can agree the profit they're gonna get, they're gonna share 50 to 50. However, the management part will be more on the partner 1 because he has contributed less than partner 2. So it depends on the agreement. There is no a certain specific agreement how the profit should be shared. I mean, in terms of the percentages. This profit that you get is not from the money directly. It is from the real economy generated. Like there's a certain project which is based on the real asset. That project generates profit and that profit is shared. on a pre-agreed formula between partner 1 and partner 2. If there is a loss, they will share the loss. This is an activity we call it Musharraka. So two partners, they contribute capital. But when it comes to Mudaraba, Mudaraba is Islamic mode of financing between the bank, which is providing the specified amount of the capital, and Mudarib, which is providing the management. So we have capital provider and we have management provider. For carrying out a certain project. So the one who provides capital, we call it a Rabbul Mal. And the one who is providing the management, we call it Mudarib. So Rabbul Mal is the bank, because the bank provides the capital. And the Mudarib is the manager, who has got the expertise, who has got some experience and knowledge in running certain projects. So Mudaraba contract between those who have capital and those who have expertise, where the first party provides the capital and other party provides the expertise, with the purpose of earning some profit, which is based under the regulation of the Sharia. And if there is a profit, they will share. If there is a loss, they will share the loss. But with the pre-agreed formula, everything should be agreed before and written down in a contract, and then starting the project. So we have a partner 1, which is Islamic bank, and partner 2, which is management or entrepreneur. He has some idea. He is coming with the project to get the financing from Islamic bank. So Islamic bank approves that project, says that project is feasible. They did all the investment appraisal and they found out that it's really profitable project. So they agreed to provide the capital, and the management will provide. Manager is going to provide the management in accordance with his expertise and experience that he has got, or the skills that he has, or she. This is Mudaraba. So on one side we have Musharraka, on the other side we have Mudaraba. Musharraka, when two partners they contribute capital, and Mudaraba, when only one partner contributes capital, the other one gives a management for certain project. Okay, there is another activity which is called Murabaha. Murabaha is one of the Islamic financing modes, and it's very popular worldwide nowadays. Murabaha sometimes referred to as corporate asset support. The concept Murabaha, it can be assumed as bank finance the needed purchase, buys it, and resells it with a markup. So basically, we talk about the cost plus financing. So Murabaha in Islamic finance instrument, which course does not include any interest. The philosophy that underlines in the root of the Murabaha is financing to supply certain needed service or product or any commercial right. So Islamic bank in this situation buys the needed property or service in advance with the cash and becomes the owner of certain service or property or goods, and then resells it to the client with added some profit. And the client knows how much profit was added to a certain product. This was the cost, and this was a markup added to this profit. And the idea is that you are buying it and reselling in installment. Somebody could claim that economically they seem similar with the conventional lending, but it's not. I'm going to come to this point at the end of this presentation, and I will explain you what is the main difference between the lending the money and getting that equipment purchased, and the Murabaha, when the bank buys himself and resells it on installment. So the customer comes to the bank and asks us for certain product. The Islamic bank buys that certain product or service from a seller, paying the purchase payment in advance, everything. He receives the product, and that product will be sold to the customer in installment basis, okay? It will be in installment basis. And the customer will pay in installment. Those installments, everything, all the details of the contract should be clearly specified in the contract. So Islamic banks buy the product and resells it to the customer on installment. This is Murabaha. We have another one, which is Ijara, is operating lease contract whereby the bank avails the asset. Yes. So it's operational lease, and which is availed by the bank, a certain asset, and is leased to the customer against a periodical rental fee for a specified period of time. It's a conventional leasing that we have it. So the asset continues to be owned by the bank and will revert back to the bank at the end of the lease contract. So Ijara is commonly used for finance of expensive equipment. For certain business, they cannot afford it to buy it, so they just prefer to lease it. So, so this is the Islamic bank act as a financial intermediary. They purchase that certain equipment or service, and they lease this asset to the customer against a certain leasing periodical rental payment. Very interesting part as well, which is Sukuk. Sukuk sometimes referred to Islamic bonds. So they are structured to avoid Islamic prohibition on interest. So generally speaking, this is done by paying the Sukuk holders with the cash flow generated by specific assets. If you compare to the bonds are not pledged to any assets. They just issued and they pay the interest. No matter for what you're using and how you're using, you're going to receive a certain money. But in case of Sukuk, and Sukuk has been divided into different categories: Ijara, Murabaha, Musharraka. So it depends on which activity it could be issued. So if it's a leasing activity, if it's a producing and selling activity, so it depends. So the most of Sukuk are bought and sold in the over-the-counter market, where the potential yields and maturities and the risk factors will affect the price. So this is the normal form of the Sukuk. So there is an issuer, the evidence of the ownership. So there is a project, okay? Manufacturer company that produce certain products and sells it and gets profit. So part of the profit is mentioned here from the company. So the one who purchased this Sukuk, he receives the profit from the manufacturer company. And this Sukuk is issued, or it could be a leasing, it could be any other activities. So here's the types of structures of the Sukuk. Like it could be leasing agreement, it can be sale agreement, and it could be equity type structure activity. So I'm not going to discuss each activity here. If you're interested, I can share the video that I've been teaching, and even I can share the materials, lecture notes related to the Sukuk. You can get all the details information there with some examples are given with the Sukuk issuance and trading. But basically the structure of the different types of Sukuk are here. Like we have 3, and sales agreement is divided into Murabaha, Istisna, Salam, and equity type structure are investment management, and partnership, which is Musharraka, and so on. So basically these certificates are based, so this certificate will be based on the contract which will be issued by a certain business. If it's a service business, if it's a manufacturer business, if it's a construction business. So if you can see the Musharraka, you can see the Mudaraba, Istisna, Salam, Ijara, and so on. So any profit the Sukuk holder will get will be based on the structure of the Sukuk. So idea is that Sukuk holder, he purchased this certificate, and this certificate shows that he will receive some profit from the manufacturer, from the companies or from any business activity that could be under a certain project. And distinguishing the Sukuk from the conventional bank. Conventional, they have lending in interests, the primacy of the debt financing. Debt financing is interest-based and does not require the assets. And conventional bank doesn't have any ownership, the conventional bonds. And they claim the cash flow only, unlimited to debt potentials. However, when it comes to Sukuk, it's interest-free rent, primacy of equity financing. Debt financing must be asset-based or backed and interest-free, proportionate beneficial of ownership in the underlying asset, ownership claim, and limits to debt to value of the underlying assets. And the last one I would like to discuss is the Zakat. The term is used in Islamic finance to refer that obligation that is every individual has to donate a certain proportion of the wealth each year to a charitable causes. So Zakat is mandatory process for the Muslims in order to physically and spiritually purify their yearly earnings that are over the above, which is more what is required to provide essential needs for the person or family. So there are comprehensive description in religious texts that describing the minimum amount of the Zakat with regards to the farm produced cattle, the business activities, paper currency, precious metals, and such as gold. So if you want to know how, as a business or any company, if you would like to know how much you have to pay this Zakat, you have to refer to our fee, auditing organization for the Islamic financial institution that has established a certain standards and certain requirements for paying certain Zakat. So the most common level of the Zakat on the wealth from cash, equities, or gold is 2.5% of the total value, which is annually basis. And before asking any questions, I would like to raise the issue concerning Murabaha and the conventional lending. From an economical point of view, it might seem that it is economically it's same. However, if it comes to the reality, in Murabaha, you are involved in a real economic asset, real economic based asset, which means that the money that you have it, let's say $100, you use this money to purchase something, and then you resell it with some markup. The asset that you buy, you pay the money for it, and you are holding the asset, and you bear the risk of holding this asset. If something goes wrong, you are at risk. So basically, if this asset is damaged, the value of this asset will be deteriorated. However, when it comes to the lending, they do not bear any risk of holding this $100. You don't bear any risk of holding this $100. And if you damage this $100, it will not be deteriorated in value. The money itself, it doesn't have any intrinsic value. You can tear the money and put it back again. The $100, it was 1 hour ago, and now it will be the same. But however, if you damage the asset and if you repair it and put it back, the value will not be the same. So this is another difference that makes a differentiation between the Murabaha and the lending activities. Murabaha, it directly involves in a real assets activities. However, the conventional lending is considered as a product. The money is not the product. The money is an intermediary that could be used to reach your final product, to resell something. So the money is not the product in Islamic finance. So all the activities that we have it are based on real assets. So I'm done. If you have any